Hello guys, and welcome back to the follow the money strategy. In this video we'll be going over order blocks and imbalances, and I'll be explaining what each of those are. Now first of all, just to explain imbalances. An imbalance in the market is when price moves very quickly and the next candle doesn't come back and fill in the gap between the wick on one side and the wick on the other. So if we see this example here, so as you can see, this candle, it wicked to the high, came back down, closed. This wicked low, moved up very quickly, closed. Next candle opens and it wicks down, but it doesn't wick all the way back to the previous wick on the last candle. Now ideally what you want is you want all of these gaps filled in. Then you can say institutional order flow is trading in a sensible manner, like it's filling in all of the imbalances and all of the gaps in the market. But if you have a look, there's a load of these imbalances in the market left behind. So there's another one here between these 2 weeks, which the market does come back, kind of fills half of it and then reacts. But then you'll see, look, there's another one there, little tiny imbalance. And this happens all the time in the market. There's another imbalance there, and these imbalances are happening on all time frames at all times in the market, and it's up to us to figure out which is the perfect imbalance to take. But just pay attention to, just to understand what an imbalance is. It's basically just price moving quickly to one side of the market, and when it gets to the other side, the wick doesn't come back and fill in and close off on the previous wick. So there's a gap left in the market there. So as you can see here, there's a gap left in the market there, it needs to come back, and it does eventually fill it. As you can see, price comes back on the other side and it fills that gap there. There's price left here, this wick comes, fills it, as you can see. There was an imbalance here. When price moved up, it moved up very quickly and the market had to come back to rebalance, so it had to close off this imbalance. Eventually it comes back and it closes off this imbalance and it gives a reaction off of that imbalance. So it's up to us to figure out which are the best imbalances. Do we trade this imbalance? Do we trade this imbalance over here? Do we trade, this imbalance over here? So it's up to us to figure out, and this is a part of the strategy in figuring out which are the best imbalances to trade. Now for order blocks, what ICT calls order blocks are basically similar to supply and demand zones, which are the last buying before selling, or the last selling before buying would be your order block, or it would be your supply or demand zone. So just an example of a bullish order block would be a bearish candle, and then price moves up higher and eventually it comes back into that candle and then reacts off of it. So that would be a bullish order block, or you could call it a demand zone. So those who are supply and demand traders, that's a demand zone. So price comes back to the demand zone. The first return to the origin or the return to the zone can be traded. Similar here, if we see on the this block here. Price comes back to it and reacts off of it. But what you can do is what you're looking for ideally is a combination of those two things. So you're looking for your supply and demand zone, and you want alongside that an imbalance in there. So if you have a look at this order block here, or this is your demand zone, price moves away from it. This candle here is your demand, price moves away and it comes back. The first time it comes back, that's tradable, and then as you can see, price just carries on. Now this demand zone leaves an imbalance here, so as you can see there's an imbalance between there and there. When price is down here, you're waiting for price to come back, fill in some of that zone, and then you can start to take that trade down. And you'd normally be looking at this point over here for your trade entry. That would be where you buy, and you would normally put your stop loss just above that high there. This is obviously in accordance if you were trading ICT or supply and demand or anything like that. That would be your normal trade criteria, but obviously we have a better trading criteria in our system. This is a 40 pip stop loss, which, you know, it's not too bad considering. Look at what price does. Let's have a look. It still gives you a 6 to 1, 1 to 6 risk to reward ratio, you know, which isn't too bad, but still obviously we'd like to improve that very much. So this is your order block with your imbalance over here. These are the ideal places that you're looking for to take trades: your order block plus your imbalance. This is another example of an order block with an imbalance, and you'll be looking for price to come back up to that zone. As you can see, it did so here. So that was your bearish order block, or it was your supply zone. The market bought up and then sold down, broke structure, and it carried on, and eventually the first return is normally tradable, and it does trade, but obviously this is counter trend. It still gives you $180-ish pips, and you could probably go down to the lower time frame here, look for a break of structure, and take, you know, a decent amount of money off of that trade. And as you can see, what happens here is this is your bearish order block. When price comes up to it, it reacts, it comes down to this is your bullish order block, and you can trade that back up, going towards, you know, going with the trend and back up to you know, looking for highs. And problem with this one is on this time frame we don't really have an imbalance, but what you can do is you can normally start going down a few time frames and looking for imbalance. So if we go down to the 3-hour time frame, we can see here that from this order block this point here, there's actually an imbalance that we're looking for this imbalance to be filled. So we're waiting for price to come fill in this imbalance. So this is actually a perfect order block. It's an order block with an imbalance, which is in accordance to our strategy. And when prices, you know, the lower we keep going on the time frames, you know, assuming prices over here somewhere and it's making its way down, we can see that there's nice imbalance here, and we can normally refine it further, go down to the 1 hour time frame, and we can see again, we can see our imbalance, and we could probably get this down to this point over here. We're looking for this imbalance to be filled. There's obviously imbalance further down here, but what we do is we'd set our alert for price to hit this level, then we pay attention to the lower time frames, wait for a breaker structure on the lower time frames so we can get into a trade. But let's just mark up the last point of the imbalance and see if the market came all the way down to that level. The market almost comes all the way down to fill in the whole of the imbalance, and on a lower time frame down here you probably get your breaker structure and some type of a trade going back up in the opposite direction. So what you'd be looking for is what we did here, is this whole area is your 4 hour bullish order block, but on the 4 hour it didn't present us with an imbalance, but as you can see, because there's a swift move here, if we start going down time frames we see a very clear imbalance, and so this yellow marked up zone marks up the 4 hour zone, the 4 hour order block. As you go down time frames you can see that there's order blocks inside of the order block. So on the 2 hour time frame there's an order block right here which is your demand zone, so we're looking for price to come into that demand zone. It's an order block within the larger order block. Go down to the 1 hour time frame, you can say okay, that's your, see how low we can go, probably the probably the 1 hour on this one. So this would be your final order block between these two white lines, and there's an imbalance in there, and as you can see price comes right into the order block inside of the order block. So this is the 1 hour order block inside of the 4 hour order block, and from the 3 hour down it gave us nice imbalance plus liquidity to take a trade off of, which we'll go over in the next few videos. Thank you for listening.